If you're wondering when you're shopping for car insurance, and there's a lot of weird words that we use, and it gets confusing because, in all honesty, a lot of agents don't know different than to just say the words that are there, and we just don't understand them. So let's dive in and go over the 17, whatever my fingers make a 17, words that are commonly used in the insurance industry. The first one is premium, and that's pretty common. That's what you pay for the insurance. So when insurance is transferring the risk, you're transferring your risk to an insurance company, you're paying a premium for that service. Commonly, if you're buying auto or home insurance, it just depends on the policies you're doing. There's something called a deductible. And the deductible is what you pay to lower some of that cost. So if the insurance is going to pay out $10,000, if you say, well, I'll do $1,000 deductible, it's a lot like getting a loan. If you add money to a loan down, it lowers the loan. It can lower the interest because the risk is not necessarily lower. Technically, we're not lowering the risk of you having an accident, but we are lowering the risk of the insurance company paying more. In those cases, the larger that deductible is, the less you're going to pay. Keep in mind, we can go crazy with that. I've got some people that have a $15,000 deductible on their roof or their house because they can afford that. They don't ever plan on claiming anything like that. So then that lowers a few $100s off their premium that they're going to pay. Car insurance is a little bit different. When you raise that deductible more than $1,000, it usually doesn't benefit you much, if at all. Depends on the state. You'll have to try it with your local agent to see if there is much of a difference. But in most cases, a lot of people will stick to anywhere from $100 to $500 deductible. The liability is the third piece that is what you're technically responsible. It's hard to not say without just saying it's what you're liable for. It's if you cause or create the occurrence, the accident, then you're the one that's liable or you're the one that's held responsible for that claim. And that liability is to others. So if you injure someone else or damage their property, that's what they mean by liability coverage. For car insurance, you're commonly going to see $100,000 per person or $250,000 per person and $500,000 per accident. So they split them up into pieces. You can do these larger different versions. I'll link a video that goes more in depth on that if you want to learn the car insurance part. For home insurance, it's just a flat number. If you own a home and you have liability insurance, it's how many hundred thousands of dollars are you going to protect. Most likely it's 300 or 500,000. It's probably the most common two that are picked. So if you injure, someone got hurt at your house, or someone's going to sue you for some reason and that house policy is going to pick up the bill, you're usually going to have that $500,000 to protect your liability if you were at fault in an occurrence that you were liable or your insurance was responsible to pay for. The fourth and the fifth one are going to be the car insurance. You have comprehensive and collision. Comprehensive is other than a collision. So it's theft, vandalism, if someone breaks into your car, steals it, if you hit an animal, if you have the car get hit by something falling from the sky, as long as it doesn't bounce off the ground. There's like different scenarios that could happen. So in general, non-driving is the common unless it involves an animal. That's your comprehensive, and usually there's a deductible to that. So they say, what comprehensive deductible do you want to carry? Most people carry a lower deductible. Some do a little bit larger. Again, it depends on the state. And then you have the collision. That's just any collision. So if something bounced off the road, hit your car, that's a collision. If you hit another car, that's a collision. So those are essentially the accidents is what we're talking about. Again, deductibles are usually higher on that to lower the cost depending on the risk that you want to have, your risk tolerance. The sixth is something called personal injury protection. And this is not in every state. Not all states require that you carry this. It's your personal injury, it's protecting you there. So if you get hurt in a car accident or a family member that lives in the home that's listed on your insurance, that's protecting usually medical for you. In states like Michigan, they offer an unlimited personal injury protection option. It's $400 to $500 a year, depending on the risk, once again. But that usually is going to protect you unlimited injury. So if you lost your arm and it's a $3 million surgery, and then after the fact, someone's got to come take care of you for 6 months, and you need a wheelchair ramp and all of the things that come with that, most to all of that's covered because they have that unlimited plan. It's a really good plan for those that don't have their own medical to protect yourself. yourself. Number 7 is technically two pieces. It's uninsured and underinsured motorist. This is for the car insurance. If you want to protect yourself against someone that either has no insurance, so they're driving illegally, and there's a lot of them lately because the prices have skyrocketed with car insurance, so there's a lot more uninsured drivers. Now you can purchase protection for yourself to say, if somebody injures me or anyone in my car, I want protection there. The underinsured is when you think that you're in a location that carries less insurance than you would want to carry. So I may carry a $500,000 liability or $500,000 worth of coverage, and I think I'm in an area where people are going to carry less than that, and I know that I can't go after them because maybe it's the income's just not there. It's just a gamble, right? If something happens, I want to make sure that I cover myself properly so that I'm not put in a loss situation to where even if I went after the person to recover it, there's nothing to go after. So carrying that underinsured motorist is very beneficial, and in a lot of states is not very expensive. It gets a little bit worse the larger cities that you're in because there's a lot more uninsured motorists in those cities, and there tends to be a lot more population. So in those cases, the cost of that can go up quite a bit. But check with your local agent to find out if that is a very expensive. It might be worth it to have for at least a few dollars, if not a few $100s per year. Now, if you are getting a little bit lost with some of these words, these are the common words that you're going to hear with insurance. I would recommend talking to a local agent. If you are looking for either home or auto insurance and you're just shopping around looking for something better and you want someone that can help explain this to you, I'll put a link in the description below where you can work with an independent agent. The benefit of that is they shop with multiple companies. So they'll help you walk you through the process, essentially look at the assets and say, is this worth carrying? Do we need more or less coverage? What is the sweet spot for you paying versus what coverages you should carry? And how can we get that the best deal? Which company can we fit that with? So they can shop with all those different companies. That's in the description below if you are interested. The 8th is coverage limits. You're not going to hear that a lot, but you'll look at it on your policy. So when you actually get paperwork, it'll say coverage limits. It's a lot of lumped of what we just talked about, and there's a few more that we're going to talk about. But those coverage limits are the limits that max out. So that's a per occurrence. If you have one accident, and you could have multiple, at least until the policy renews. If you've had a ton, then they're just not going to renew your policy. But if you've had one occurrence and you have a limit, so a lot of people will carry $250,000 for car insurance per person, $500,000 per accident. So if multiple people got hurt, there's a max limit of $500,000. They may carry property damage, so if you damage someone else's car, of $100,000. That way, if you hit 3 cars in one claim, then it's covered all the way up to that $100,000 claim. That's that coverage limit that we're speaking about. Now that goes into the next one, which is exclusions. Exclusions you have to pay very close attention to, especially with home insurance or business insurance, because there are a lot of exclusions on those. Car insurance, not so much. It's pretty flat laid out because it's the most common. There's bodily injury, property damage, uninsured, underinsured, the vehicle, and there's like some other pieces. I'll link that video again here in a moment. But that's pretty laid out. There's not many exclusions except for if you maliciously did something, which is any insurance. They're just not going to cover something like that. But in general, there's not a ton of exclusions there. Home insurance, there are a lot of exclusions depending on the home policy that you purchase. There's different levels of home insurance, and the most common, probably 95%, they do like an HO3, which is your standard home policy. And that home policy will have exclusions. For example, if you have an earthquake, if there's a volcano eruption, there's different scenarios that they're not going to cover. Now, that doesn't mean they don't offer coverage to overtop that exclusion if you're in a state that needs that type of coverage, but they exclude certain scenarios. Another good example, if you have $1 million painting, there is not an exclusion that falls under the coverage limit. They may cover the painting up to $1,500, but you want $1 million, right? So they're not going to let you have that coverage unless you add an additional add-on or endorsement that offers extra coverage for that scenario. And then when you lump all of this together, we're saying, okay, when do I want to be covered? Because most policies are anywhere from 6 months to a year-long policy. You can go longer or shorter depending on the company. I've got some companies that will let you go 3 or even 5 years, which is pretty crazy and neat to do, but they tend to be a little bit more expensive because they're taking on that risk of what could happen. In general, your policies are that 6 or 12 month long. That's called the policy period. That's the effective date is when you started the policy in that policy period, and then the expiration date is when that coverage ends or renews. 9 times out of 10, as long as they're going to allow you to continue with that company, you're going to have what's called an auto renewal. That way, as long as you've paid the premium, that policy just continues and goes into the next year. And I already covered number 11, which is endorsements. I was talking more about the house policy, but you can do the same thing with your auto policy. You can do an endorsement, and that's just a fancy word to say add-on. If I want gap insurance, if I want rental car coverage, if I want to have a savings bank so I can save a little extra money and pay some more in my car insurance so that if I have a claim, it just is already paid. The deductible is taken care of because that savings bank has been filled to save for that. There's home insurance, which has additional jewelry items. It has different guns, depending on the company. Some offer unlimited guns, but you got to know which one. So there's like those pieces, right? Those are called endorsements, which are just fancy words for adding on additional coverage to where there isn't normally a lot of coverage. So all of this is great, Mark, and this is fine and dandy, but what are the words that I'm going to hear even more often? Hopefully you never hear this word, claim. Claim is pretty common. You should know this, hopefully. If not, we'll go through it. So claim is you are claiming that there was an accident. There is a claim being put into process. If you hit someone, someone hits you. If there's an injury, in most states, as long as someone's been damaged more than $500 or someone's injured, they legally require you to call the police. And the police won't file the claim for you, but they'll give you the police report, and then you take that and file the claim. That's essentially the perfect process if there's a large enough accident, but the claim is up to you if you're going to claim against your insurance. So like we said before, the insurance is there to make you whole. It's there to transfer the risk. So that claim is you saying, yep, I was responsible, or nope, I wasn't responsible, but I don't care. I'm transferring this risk over to this insurance company because I pay them a premium for them to take on that risk for me. And as long as you're within your limits of liability or your limits of coverage, then you're going to have that process taken care of. And obviously they've investigated, they said this is a covered claim, we're good to go. The biggest thing that I see people make mistakes is when they go to these 1-800 number companies or they buy a policy online. Actually, I just had an aunt do this, and if you're watching, I'm not going to out you, but she switched companies to a company that I like that's actually online, and she did it herself. She purchased the policy, and then she called because someone had hit her. There was no damage, and she ended up not filing a claim, but because she called them directly instead of having an agent to talk through, they automatically count that as a claim. So nothing was paid out. Within 2 months of her being in that insurance policy, they have this 60-day window where they can deny you even and say, we're not going to insure you, or you lied about this, or this happened, and the price can change. That claim fell into that window for her, and her price went up about $100. At the end of the day, it was still cheaper, so it made sense for her to probably stay with the company. I don't know exactly what she ended up doing. So that claim will go on file if you call the 800 most of the time. And so you got to be a little bit careful on when you shouldn't file a claim. And I have videos that go over that too if you're interested. And if you're in the middle of a claim, you're going to have what's called an adjuster, and that's number 13. And that's going to cover, that's the person that handles your claim. That's as simple as it gets. It's you get assigned an adjuster, and that claims adjuster adjusts all the premiums and the billing and make sure the car's worth what it's worth. And then they say, here's the check that we're willing to write you. Do you accept it? If you agree, then they either pay the repair company or they send you a check if they're going to total your car. So that adjuster is the one that is supposed to handle your claim, hopefully from start to finish. That way you're not left in the dark. So how they'll handle the claim with that adjuster, there's number 14 and number 15, which is the value of the car, and we're talking about what type of claim they're going to file. So the 13 is the value, so it's the actual cash value versus a home or versus a sports car. There's different scenarios, so there's really two. There's actual cash value, that's what the car's worth today. If you sold it on the market, that's how much the actual cash value of your car is, versus replacement costs, which doesn't really ring true for car insurance. You probably won't find a company unless it's like a classic car that has a high value that is not on a blue book, right? You've done additions and all that. So the replacement cost is how much you've cost to replace the car. So it's not the cost of the $3,000 car went down to $2,000. No, to replace that car, it's now $5,000. So I'm going to get that $5,000 to go replace it. And then there's the agreed value, which is a third piece, and that's where you both agree. That's more for like boats and motorcycles and things that fluctuate a lot from year to year. So once there's a range, it's between, let's say a boat is between $10,000 and $15,000, depending on the features and which one you go with and the year that you're insuring it. The insurance company, if you're in that window, they'll say, pick a number. Which one do you like? I like to cover 12,000, or I like to max it out and say I'm covered for 15,000. You've agreed upon that value. So if you have that claim, that 10,000 that you picked or that 15,000 that you picked is what you're covered for. That's a really good way to go because now you can actually agree upon that price. 9 times out of 10, you're getting the actual cash value because car insurance, I've never seen a company not do it that way other than like classic type cars. And then to pull that back, we're mixing 5 things in here. So the actual cash value, the replacement cost, the agreed value, and then we've got that replacement cost again when we're talking about house insurance. House insurance, you have to insure the house up to 80% of the value or the replacement cost of the home. That's the amount to rebuild the house. That's the replacement cost estimate to rebuild the home with the wood that it costs today, with the price of lumber, the price of materials, the cost of labor. To build your same home today, you go off a replacement cost. And 9 times out of 10, you're not going to find a company that will let you insure under 100%, but technically and legally, you can insure as low as 80%. You can go lower, but you're losing percentages of what the value is. It's a specialty company. I honestly haven't even looked into what companies even do that anymore, but that's an option. Number 16 is gap insurance. That's specifically for car insurance. If there's a gap between what you owe on your car, if you have a loan, to what your car is worth. Let's say your car, when you bought it brand new at the shop or at the dealership, was $25,000 and you drove it off the lot and you lost X% value. Next year, it's worth $20,000. Well, you still owe 23 after all your payments have been made, but it's only worth 20. It's car insurance, so it's actual cash value. So they're only going to pay what the value of the car is, which is 20, and so now you're negative 3,000. That gap insurance will pay the gap in between what you owe and what the car is worth. Really beneficial and inexpensive to have in most policies, but it's a really good piece that you have an option to purchase. That's an endorsement that you can add on to your policy or an additional coverage as they call it. And lastly, this isn't the end all be all because there's probably 300 words in insurance, but there's something called the declarations page. And that's the word that you're going to hear quite a bit as you go further out years and years from now. If you start shopping around, and companies will ask you for a declarations page. If you get a loan, they're going to want the declarations page showing that you're covering the car with X amount of deductible that you've agreed with them. That declarations page is really the list of everything. So it's got you, the date you started the policy, how long the policy is, when it expires, the coverages that you have, the cars that are insured, or home, or whatever you're doing. So it's the named everything page where you can just show this. And then you don't have to read through all the definitions. It's not going to have the exclusions or any of that stuff, but it's going to give you an idea or a really quick view of what your policy is that you purchased. Let me know what your thoughts are. I know there's a lot and some of this might get confusing. The number one thing that I would recommend is if you're looking at car insurance, then you need to understand what coverages you should have. Same thing for home insurance. So I've got 2 videos that I would recommend that you check out to get more specific on the actual coverages that you may want to carry. We've got our car insurance 101 here, our home insurance 101 as well. Hopefully it's helpful. Let me know which words you hear the most in your insurance. I'd love to hear if there's any that I missed that you hear commonly. I'm Mark with Think Insurance. I'll see you in the next one.